What do you like in Japan?
Yeah, the fact is that when you look at overall valuation in Japan, it looks definitely much more attractive as compared to Europe as well as the US. When you look at Japan right now, it's roughly around 1.5, 1.6 times price to book. And then particularly when you look at Europe, is roughly around 2.1 times forward price to book. And then when you look at the US, it's roughly around about 4.5 times forward price to book. And so as a result, we definitely do like the fact that valuations look very attractive. And overall, we do expect to see a bit more of a pickup potentially in, first half fiscal year earnings, due to be reported over the next couple months. And then, potentially a pickup in economic activities in Japan as well. As a result, potentially, more loosening of, any restrictions that they had with COVID.
As we have seen a lot of optimism given the leadership reshuffle in Japan, but Japan is right now the best performing equity market in the world. Do we have room for more upside? And in which sectors would you see that when we continue to see those pressures coming from chip shortages as well?
Yeah, we definitely can. The chip shortage thing is actually not, just a Japan phenomenon, right? It's everywhere around the world. But when we look at specifically some of the things that we're seeing, sort of on the timeline here, we've got the LDP sort of elections coming up at the end of the month, and then you have the lower house elections coming in October/November. So we definitely still do have quite a bit of catalyst over the next couple months for us to continue to like Japan. The fact is that a lot of the gains that we've seen potentially might have been gains that we would have expected in 2022, but a lot of this is actually happening now. So the markets are riding the momentum, riding specifically the positive sentiment that they're getting, and it seems as though the market is going to be quite positive regardless of who's going to be elected with the LDP coming up.
What do you like within the ASEAN emerging market space, particularly as we've seen them so hard hit by Delta, but some of the investment opportunities still seem pretty resilient?
Yeah, from a valuation perspective, the ASEAN markets looks very attractive because across the board, when you look at the ASEAN markets, they're still trading well below their historical 10-year price to book valuation. So in particular, when you look at places like Malaysia, when you look at places like Indonesia, these two markets are trading, quite below. And then even Singapore and Thailand as well, these markets are also trading, quite below their historical averages as well. So purely from a valuation perspective, we definitely like the countries. We've seen how the ASEAN countries, as a whole has underperformed over the past few years. And obviously, with the restrictions that a lot of the ASEAN countries have had with COVID, they've opened quite late in regards to, sort of reopening their economies relative to the other developed markets in the world. And so as a result, when we start to see more economies opening up within the ASEAN space, that should definitely be a boost to a lot of cyclical stocks within the ASEAN markets.
How much does the FX, vulnerabilities across the region still feature, given that it feels like a lot of these EM economies are better placed to be able to deal with those sorts of volatilities as a result of Fed tapering? Is that something that equity investors still need to worry about?
They do to some extent, but EM markets are definitely a lot more. I would say a lot more insulated, and specifically a lot more. They're able to adapt to specifically any strength that we see within the U.S. dollars compared to what we saw 5-10 years ago. So specifically, we're not too overly concerned potentially of what a strong dollar might actually have with the emerging markets. We know historically, there has been a very strong correlation. But with that said, with a lot of the emerging markets opening up, we're living in a very different world than we have over the past 5-10 years or so. And so as a result, with a lot of these emerging markets opening up, with Asian equity markets, or with Asian markets and economies opening up as a whole, we do see a lot of potential upside here. And at the end of the day, it really does come down to specifically, how earnings will, sort of revive over the next couple of years. And then also, we're very much focused on the ROE as well, because for instance, within China, when we look at the non-financial companies listed on the A shares, their ROE continues to improve. We're seeing ROE now for non-financial Chinese companies now above 11%. And that's specifically somewhere we feel that there continues to be an upward trajectory, and something that is quite positive in our views.